the pattern is named after H.M. Gartley, and he wrote a book in the 1930s entitled Profits in the Stock Market. Now the funny thing about this book, it was very expensive at the time, because what was going on in the 1930s in the United States? We know there's a depression, right? So probably the most unpopular subject on the planet was to talk about trading the stock market, and so H.M. Gartley wrote this book, Profits in the Stock Market, in 1935, and the unusual thing about it was that he was charging so much money for this book. He wanted $1,500 for this book, which was the equivalent of the 3 brand new cars at the time. On page 222, 223, he describes what he calls one of the best trading opportunities. And in that section of the book, he has a picture, and he shows a trade setup there that has evolved over time, and today is now referred to as the Gartley Pattern. I wrote the Gartley Trading Method based on my research over 10 years on just this one pattern. In fact, Gartley does mention head and shoulders and double tops, double bottoms, and he doesn't talk about a Gartley pattern. He does talk about one of the best trading opportunities, and he describes this trade setup as it relates to head and shoulders and double tops, double bottoms. So he just fine-tunes it a little bit, and that's what's happened with the Gartley pattern over time, is it's gotten better and better. Traders like Larry Pizzavento have made it popular, and he was the first to apply Fibonacci ratios to the pattern, which has helped tremendously. There's a lot of discussion about the Gartley pattern these days, so I felt it was necessary to categorize some of the patterns themselves into 2 specific categories, one of which is referred to as the Gartley, the trend continuation Gartley, the TCG, and the TRG is the trend reversal Gartley. But I think one of the best things about the Gartley is the fact that you're risking just a little bit of money. Even Gartley himself said, when you do lose, it's a small loss. And what he meant by that was in proportion to the huge profit windfall that you can participate in. The Gartley pattern is simply a trend followed by a counter trend. Look for the trend, find the end of the counter trend, buy there, hopefully the trend will take off. So that really is the Gartley pattern in a nutshell. It makes it really simple. It wins more than it loses, and no one wants to play in the sandbox when it gets to that certain level, where as it starts to approach that previous low, everyone starts to panic, everyone feels incredibly uncomfortable, and they go, wow, I don't know what's going to happen here. All I know is that I don't want to trade right now, because man, if it takes out that low, who knows what's going to happen? It's going to drop like a stone. So some people say, hey, you're trying to catch the falling knife. Well, you know what? Yeah, it might get ugly sometimes, but eventually you get the hang of it. If I can give you one little nugget, if there's one thing I can do to help you, it's this. Find out what the public's doing and do the opposite. Really, you know, I can give you a really good trade setup, but you have to marry it with proper money management. And in the Gartley Trading Method, I'll show you a few different strategies.
See the rain about to fall. I'm broken by the thought of you to love me.